Let's talk about dependent care FSA. Last month I made a video on how we plan to grow our HSA to $460,000 and how we could contribute to what's called a limited expense healthcare FSA to save money on taxes. You can check out that video and I will put that link in the description below. Now, a dependent care FSA is another pre-tax benefit account that you can use through your employer, and you can use it for preschool, summer day camp, before or after school programs, and child daycare. A lot of parents don't use the dependent care FSA even when they're eligible for this benefit. I don't know why, but let me break down how you can save money on taxes with this benefit. So if you're in the 24% federal tax bracket, for every $1,000 you spend on dependent care with an FSA, you could save about $240 in federal taxes. Now, I am not a tax expert, so you should get with a CPA to find out how much you can actually save on taxes by using the dependent care FSA. For the year 2022, you can contribute up to $5,000 to the dependent care FSA as a single filer or a couple filing jointly. If you're divorced and have kids together, only the parent who has custody of the children can use FSA funds for childcare. The other catch is that if you're married, both you and your spouse have to be employed. However, if one of you loses your job, the unemployed parent has to actively look for a new job, and your annual earned income has to exceed the total claim expenses, unless the non-working spouse is disabled and unable to work. You have 3 ways to use your dependent care FSA. Your dependent has to be younger than 13. You have a spouse who is unable to work and care for himself or herself. Or you have an adult dependent who is unable to care for himself or herself, and you claim that adult dependent on your taxes. Keep in mind that your FSA has the use or lose policy, so you need to make sure you either use it all or don't over contribute to it. By the way, you can get our free fire resources by visiting firesidechat.com/contact. You can also check out the Fireside Chat shop, and I have all of my stuff on my bookshelf at firesidechat.com/shopping. If you meet all the eligibility I just talked about, then the next step is to register your dependents with the FSA. Once you register, some banks that manage the FSA will send you a debit card in the mail and then access to your account like a checking account. How this works is you contribute directly to the dependent care FSA from your earnings. So for example, if your gross earnings every 2 weeks is $5,000 and you contribute $200 every 2 weeks into your FSA, then your gross income is reduced from $5,000 to $4,800. You could save up to $5,000 total in taxes depending on your tax bracket. That doesn't mean you get $5,000 back. It just means that $5,000 is not considered taxable income. Now let's talk about how to get reimbursed from the dependent care FSA. First, if you have the debit card option, then it's pretty simple, right? You just have the debit card to make qualified dependent care expenses, and you can even register automatic payments with qualified expenses directly from your FSA. Again, it works just like a regular checking account if the bank allows it. Another way is to pay out of pocket and then get reimbursed from your FSA later on. Make sure to check with your HR to find out how you can use your FSA. Here are the qualified expenses for your dependent care FSA: physical day or night care, in-home care, summer camps, before and after school care. You're not eligible to use it for tuition expenses, overnight summer camps, music or sports lessons, meals, or housekeeping. Let me use the FSA feds as an example. Whenever you request a reimbursement, you'll need to provide the name of the provider, date of service, the type of service, and the cost. The IRS sets the rules on what expenses are considered qualified expenses. If you see here, you could use adult daycare center, an au pair, work-related babysitter, before or after school program, and childcare as qualified expenses. Non-work related babysitting, dance lessons, medical care, tuitions, and field trips are not considered qualified expenses. If you want to read more about the qualified expenses, I will put this link in the description below. By the way, if you need help with your personal finances, you can schedule a free one-on-one 20-minute financial coaching session by visiting firesidechat.com/coaching. So you need to save every receipt for every qualified expense. If the IRS audits you, then you will need to provide your itemized receipts to verify the eligibility of your expenses. When you submit the claim, you'll need the dependent care provider to certify the service by signing the claim form so you can get reimbursed for the expense. You can upload your itemized receipts and other supporting documents on the FSA website and get reimbursed that way. The most common qualified expenses people use with Dependent Care FSA is the daycare and the before or after school care programs. And they're probably one of the highest expenses when you're raising a child. So for example, let's say your daycare per child is $500 per month, so that's a total of $6,000 a year. Your Dependent Care FSA allows you to contribute up to $5,000 in pre-tax dollars for the year 2022. If you get paid bi-weekly, then you could contribute $192 every 2 weeks. Keep in mind that I'm using the most generic numbers here, so you could contribute differently if you want to. Because your FSA covers $5,000 out of $6,000 of your total daycare expenses, then it covers 10 out of 12 months of your child's daycare with $500 per month. By the mid-month of March, you should have $1,100 saved in the FSA. That's when I would start requesting reimbursement for my FSA to pay for the daycare expenses. If your FSA bank allows you to do the automatic direct deposit, then I would just set it up starting in March all the way until December. I would just be very careful in the month of December because you need to use up all the funds before the end of the calendar year. You have to keep in mind that on January 1st, 2023, your FSA will go to $0 regardless of how much money you have left in there. If you're worried about December being too close to the deadline, then consider contributing more throughout the year and only reimburse yourself from February till November. You also have to re-enroll every year into the Dependent Care FSA because it's not an automatic re-enrollment. So you can download the spreadsheet that I just showed you for free by visiting firesidechat.com/contact. If you're still wondering if Dependent Care FSA is the right choice for you, talk to your HR and find out about your eligibility. Most FSAs are making things easier for employees to upload their receipts and claims to process their reimbursements. I know for federal employees, they can download the FSA Feds app and submit a claim there by taking pictures of their itemized receipts on their phones. All you need to do is make sure you set up your bank account profile to get direct deposits from your FSA. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.